okay, you get the dip for JCPenney, you got Kohl's. Do you want to buy the dip? JCPenney killed it the quarter before.
JCPenney is a special situation because they're really trying to do a turnaround. And one of those things that if you go into a JCPenney store, it looks a little dire at the moment. So I think that that's not necessarily a situation that we would be involved in. You've got a lot of debt to work through. You've got a lot of issues to turn around. Something like a Kohl's is a little bit different, although their outlook for the whole year wasn't so great. Home Depot looked a little bit better. Same-store sales weren't so good, but the margins were fine, and it's also been bad weather, so it's much easier to explain what's going on at Home Depot. But I just took a look at AutoZone, and AutoZone came out with better sales and better numbers. So I don't think it's the same story across all of retail. You've got some very different issues, and I think something like a Kohl's you'd be looking at here. But you have to look at what's going to go on with the rest of the year before you get to. I mean, I'd have to see where it is from a valuation perspective. But I think that some of these can be very interesting when they have a miss.
So, as you say, they're very different situations. Is it idiosyncratic, or are there some patterns? For example, can you segment it according to lower income, middle income, upper income, luxury versus discount?
I think you can segment it in a number of ways. You can definitely do it through that sort of tiering between lower income and upper income. But also, if you look at things like clothing retail versus other types of retail, you know, we've had huge auto sales for the last several years. So you would think that as auto sales are slowing down, the repair guys on all that sign, the AutoZones, the O'Reillys, those are all going to be in better shape. And Home Depot, that somebody was making a point earlier this morning, that you really have very heavy things. It's hard to disintermediate a Home Depot, whereas clothing, it's a little more tricky. Even though Kohl's has a relationship with Amazon, I think that when that relationship was announced, the stock did very well. I think that now people are looking at it and going, okay, but is that going to be enough to save the other issues that are going on softline retail? Because I think that's more difficult.
And, you know, picking up on your point on Kohl, looking at the visibility for the rest of the year, you did have the CEO saying that the year started off slower than we'd like, with our first quarter sales coming in below expectations, yada, yada, yada. But the company is planning the year more conservatively, and that's not really taking into account any sort of tariff impact. Can you talk me through sort of what the inventory management is for these guys if we have demand in the back half of the year not holding up? What's that going to do to these kind of retailers?
I think inventory management for the last couple of years has been really tough for all of them, because when you have a threat of a trade war, you have a tendency to go, you know what, I better order before this is going to happen. And then I think that it's been a very uneven situation for inventories, and I think that planning that is quite difficult. I think originally, if you looked at where S&P earnings were projected for the year, for the group, the back half of the year was going to be much stronger. And now you're looking at maybe front end a little bit stronger than people expected, but the back half not so much, and especially with Europe slowing down too. I think you've got a lot of things going on here.
Sarah, put those two things together if you can, and that is, on the one hand, worrying about the inventory management. You don't want to have too much inventory that's going to kill you in the long run, and same-day delivery. I mean, how's that going to work for the Amazons of this world and for the Walmarts of this world? Does that mean they're going to have to really ramp up their inventory to make sure it's available same day? I'm not sure how that works without running the inventory risk.
I think you have to, and I'm sure that there are some very sophisticated algorithms in software that try to help you manage what the popular items are and how much to keep on hand. But yes, I think that absolutely complicates things, because when you have mistakes or when you have over ordering, but you want to keep something right here, right now, it's very difficult to say, well, it's just, I think it adds a layer of complexity that people didn't have before. I think that ends up, though, being a benefit to people like TJ Maxx and the resellers, because in the end, if you do make those mistakes, you've got a bunch of inventory that's going over to the sort of second-tier group. So, I mean, there's puts and takes in the whole system, but I think it does add a layer of complexity, and I'm sure that there are some people working on some very complicated software to try to make that work.
So what do you like in retail, or do you avoid the sector?
Well, as I mentioned, AutoZone. So I tend to like the companies that I think are going to benefit in an environment where auto sales may be slowing and or people are going to keep their cars a little bit longer. So I like that whole group. I think that AutoZone, O'Reilly, that group has a nice trajectory going forward. I think that there are places, I like Home Depot. I mean, I think that there's a company where you've had consistently good performance. It's very difficult to replicate their network. They are in a very specific area where it's, again, there's the Lowe's, but Lowe's is not as strong as Home Depot. So they're in sort of a fairly concentrated market, and they are looked at as the leader. And they are investing in a lot of things to help them with distribution, which I think is bigger than opening stores right now.